Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, as you can see, not joined by Joel Elconin today. We have a special guest host joining Dennis and I. That is Kenny Glick from hitthebid.com, fresh off the plane from a nice 2-week vacation in Italy. So we're going to ask him all about that. On the show today, we have a lot to discuss. We're just heading into the start of earnings season, so we're going to look at some of the stocks reporting today, as well as preview some of the ones reporting later in the week. We obviously have this big meeting over in Helsinki this morning. Not sure if any headlines have come out of that yet or if that'll move the market at all, but we'll have our eyes peeled nonetheless for headlines coming out of that Trump-Putin summit. We have some setups we like to discuss as well, and some ratings changes this morning being made. We're going to cover all that and more in our chat rooms. If you have any questions, throw in your tickers, premarket.benzinga.com, youtube.com/BenzingaTV. Looking at the markets this morning, we are falling off the highs a little bit in the S&P futures. Crude trading down a little bit. Gold, we are mostly flat. I haven't even looked at Bitcoin. I don't even know if I should, if it's worth looking at Bitcoin anymore. So let's just skip on Bitcoin. Dennis and Kenny, how's it going this morning?
Let's go to Kenny Glick here, special host. He's back from vacation here. Joel goes on vacation. Kenny comes off vacation, and he's got some really cool glasses on here this morning. Kenny, what is going on?
I'm just coming off Rome time, actually. I'm not too sure exactly what's happening right now. I know I put a T-shirt on because I didn't know we were going to be live on camera, so I threw the quickest shirt on. But I'm ready to rock. I mean, I didn't know that the first thing I'd get back and start hanging with you guys this morning. So this is exciting for me. So let's rock and roll.
Let's talk. Let's jump right into it.
Wait. Before we come in, can I ask Kenny exactly? So you're on vacation for 2 weeks. I assume you're not looking at a computer much or the markets at all, if anything. So you come back. This is your first morning back from a nice long trip. What do you typically do to get back? Besides hang out with us, what do you typically do to get back in the swing of things?
Crack cocaine. I'm on my third cup of coffee.
Get your mute button ready here, Spencer. We got to be on. We got the 5-second delay. You got to be ready here for Kenny.
What did he say?
We're now promoting crack cocaine
on
this pre-market.
Well, this is legitimately. I looked at the computer the first couple of days because I have that addiction like everybody. Doing this 20 years, I can't not look. The last 5 or 6 days, I really did went detox, and we didn't have time to look at a computer because if you've ever been to Rome, you're basically walking for 12 to 13 straight hours, and then you really don't want to do much. So to get back in the swing of things, I'm just loading up the computer, just seeing where everything was, where everything is, and for me, it's pretty simple because I'm not a big fan of fundamentals anymore. I'm not too influenced by the media. I'm more of a technical guy, and I could just, see where what I'm going to be doing today. I look at some of the high percentage gainers because I know one of your guys that used to be in the room taught me all about the high percentage gainer list to be sure to look at that list in the morning. But to get in the swing of things, it's just I just have to work out the cobwebs, and I'll be ready to rock and roll as soon as this market opens up. I'm already looking at a market that broke down on the VWAP this morning. So you mentioned the S&P futures coming down. It's already looked like a pretty decent short. So right back in the swing of things. It's just squiggly lines and VWAP for me, and green and yellow, and green, yellow, and red.
Let's talk about your trading style a little bit here. It's been a while since we've had you back on the show. Now, do you take what would you say your average time horizon here is when you're making a trade?
Lately, it's been 1 day. I'm still the old school day trader. So if something's going my way, I will turn that into a swing trade. Meaning most traders, guys who've been doing this for so long, everybody has these horror stories, how it's a trade that's gone bad and suddenly it's a swing trade. And then that swing trade turns into an investment. And next thing you know, you're sitting on conference calls trying to figure out what stock you own and what these companies does. For me, I'll take what turns into a pretty good day trade, and then I'll hold on to it. Usually it's a 3, 6, 9 day pattern that I look at. If something's working for 3 days, generally it's going to start working for 6 days. Obviously there's a handful of stocks that work. You're talking about your Netflix and your Amazon. There's those, the Boeings that are just consistently going up. But generally I found, and I don't know if this has been for the last 15 or 20 years, but lately it's been these 3, 6, 9 day patterns for me. So if I get through that third day, usually we're looking for 3 more days. And then I'll just base everything on what we use, something called the multi-day VWAP, which is something not that many people focus on. VWAP is generally something a lot of people use during the day on a minute-to-minute basis, so they see how the VWAP closes. I've taken it to the next level, and a bunch of guys that we trade with are using this, and it's just phenomenal. I didn't know why it would work, and again, it's been like 3 or 4 years now. This multi-time frame VWAP, just to see where the VWAP was yesterday and where it was 3 days ago, even 3 months, 6 months, and it's giving me this heads up of where. And we call it something called the anti-VWAP. So when a stock starts to, like Fossil, for instance, was one of our incredible winners. And it was on this massive short squeeze, FOSL. And it gave us this indication that now's our time to finally get out and go short at around, 29.50. And so far it's pulled back to that 1 month VWAP, which is around $25. So again, I don't want to get stock specific, but generally I'm looking at, everything as minute to minute, unless proven that it should be a little bit more in an extended time frame.
It's such an interesting, and just like you said, there's so many traders that, and I've seen it, in the prop industry so many times, where people just don't want to take a loser, and you're taking the opposite. How do you manage your losers? So you get into an intraday trade, starts working against you. Do you cut it right away? How do you manage your losers?
It's the Band-Aid effect. You don't want to pull that Band-Aid off slowly. You want to just rip it off. Admit you're wrong. It's just one trade. There's going to be so many more that you're going to be doing, especially if this is what you do. If you're just just doing it as a hobby and you want to believe in a company and you're an investor, then you're not doing what we do. But if you're a trader, as soon as that trade goes against you, especially again, I trade like I'm an algorithm. Let's face facts. Maybe 70% of what's going on here is algorithmic. There are computers fighting us at all times. You got the high frequency guys, you got, algorithms. And what we do is you have to trade as if you're a computer. So the computer doesn't get emotional. The computer doesn't care that you're taking a loss. It is what it is. It's just one trade. And again, if you're trading these high percentage gainer ones, most of them are pump and dumps. I mean, you could fall in love with some of these stocks. Like I forgot I'm looking at the list right now. When I came back, before I left, there was one GBR, okay? And they were talking about this like this was going to be the new Exxon. I believe this was the one that had an additive to gasoline, GBR, flying off. And come on. I mean, as soon as this thing rolled over and broke down, you got to get out. And I'm sure there's people in there sitting there, well, wait till the next news release. They're going to, they're going to come back. You'll see. I'll dollar cost average down here. That's not what we do. As soon as it starts to go, wrong. And again, my love affair with Alibaba came to an end about 2 weeks ago. The stock's just it's not doing what I want it to do. When that thing broke 210, I thought we were off to 250 and I was buying more at 210. So when it rolled back over and broke 205, I was like, you know what? This thing's going back to 180 and I'm not going to stand for it. So I dumped it and I took a loss and it went back to 180. And, right now floating around 190, it's pretty much dead money. It's just one trade. I know there's going to be something else. And there's going to be something more exciting. There'll be more percentage gainers that come out of nowhere. Stocks that we've never heard of are going to be, absolutely fantastic. Like, I don't know if you remember the RKDA story, whatever that was. That was an exciting one for about a week. And there's still people that are waiting for their, whatever that was, that product to come back and revolutionize the world again. These are not the ones that I trade regularly, but these are the ones that most people get hurt on because they want to believe in what they bought. And usually it's just a pump and dump.
What about AMD? When we were in New York together, I think it was just over a year ago there, you're still very bullish AMD. It has been up and on fire here lately. Is this one you're still playing from alongside AMD?
We have some in again, I have a family kind of fund where we sell naked puts on stocks that we like. So officially we're still long AMD, but not at these prices. So we've been selling 1250 puts and anything below that, because I don't think the stock, even if it, has a pullback or starts to maybe get even scarier, because now we're at 16 and change, I think last I saw it. I don't think we're going to see under 1250 anymore. So what we do is, once we establish the idea that we like a stock and we don't want to buy more here at 16, I'll be interested again when it breaks 1750, because when it breaks 1750, chances are it's going to head to 20. But right now, to be long some of these stocks, we're selling naked puts, and we're going out, 3 months, 6 months, 9 months, sometimes, as far as we can go, sometimes some leaps. That's the way I've been trading Twitter, because again, I think it's a takeover. And, again, I don't want to keep buying it in the 40s, but I don't mind selling, 3 months, 6 months out, any puts that I could find under $30. It was scary there for a moment. I guess there was the news about the fake accounts, but It looks like that's just like any other bad news in this market. They forget about it within.
They forget about it really quickly. Let's jump over into bad news in this market. We do have a little bit of bad news for Tesla over the weekend, because Elon Musk still has his Twitter account. Spencer, fill us in the details here, because Musk got a little bit happy with his tweets over the weekend. The Tesla shareholders are getting hit because of a tweet.
Well, yeah, I don't know how much detail you want to go in on. Just the fact that
I want the tweet. Yeah, I want the detail.
You want the exact tweet? He said where he called the man, one of the men, I guess, responsible for helping to rescue these boys trapped in the cave. He called him a pedophile, among many other things. But I would actually argue that there is good news this morning, according to a report from Electric. They're an outlet covering the electric car space. They said that over the weekend, the Model 3 traveled 622 miles unmanned on a single charge. That's good news for Tesla as an engineer.
The Tesla's the company,
right? As a car, that seems like it'd be good news to me. I think Elon Musk's Twitter account is sort of, if you want to assign blame for the reason the stock is down this morning, I guess you can go with that. But the guy's got a lot of time, spent a lot of time on Twitter, so I don't know.
I mean, I just shake my head at. Here's he's a genius. I mean, the stuff he's doing with the SpaceX, the stuff he's, able to accomplish, the guy is, technically a genius. Socially, I don't know what the hell he's thinking, when he come on here. Why are you bothered? First of all, he had an interview on Bloomberg last week, I think it was, saying he was going to cool it on Twitter, that he has to stop getting so, heated up at debates and stuff on Twitter. And what's he do over the weekend? He gets into a fight with the one guy because he, basically said his sub wasn't going to work, and calls him a pedophile. I mean, this is just hit, the news that was all over my Twitter stream. This is the reason the stock is down 8 points. I'm actually surprised it's not down more. I mean, he's the face of Tesla. So it's not that far off of, the face of when Steve Wynn is out there being accused, and we saw what happened.
I think that's apples and oranges, I think. I
don't think so, Spencer. Why? Why do you think that's apples and oranges?
Because that was the case. In this case, this is someone just getting mad on Twitter and saying something mean.
Called one of the heroes of the whole world right now, a pedophile.
Right. Saying something mean over the internet is not the same thing as,
maybe
sexually
not,
harassing your employees.
It's still the brand. You're still tarnishing the brand. People look at this, they can look at this and they get this story and say, wow, that guy isn't, not lack of a better word, but an ASSHOLE.
Right. Actually,
did you want to go buy a car from him? I mean, there's going to be the people thinking like that this morning. There is, because the stock's down $8. I mean, I think this tarnishes the brand to a certain extent. So this scares the hell out of me. I'm so glad I sold stock last week, obviously, because I had it on for a swing trade there, and I've been pretty ticked off if I was down 8 points just because he's happy with the Twitter account. Is this anything to do with Tesla? Not the fundamentals of the company right now, but if he tarnishes the brand, it could be. So I just think he's got to cool it on his Twitter account. Kenny, what are your thoughts here? I mean, the guy comes out and, obviously, he's done a lot of great things here, but he keeps coming with these tweets and he's getting in battle royales with people. And now he's went as far as to call somebody a pedophile who's being viewed as a hero right now in the world. I think it's pretty bad for the brand. What are your thoughts, Kenny?
Well, this is the first I'm learning of this, because again, I've been kind of, off the interweb, but why? Why is he doing this? I mean,
why exactly? It doesn't make any sense.
There's no upside to what he's saying here. Again, I don't get it. But again, I don't want to get into politics, but I have to. But if again, we live in a world where we are just completely on, we're trying to be politically correct, but then we have the president doing what he does. So then you got Elon Musk. If we're gonna, I don't know. I actually don't want to even comment on this one. Maybe you should just stop talking.
Kenny,
I
hear you.
understand what his end game is. I think he thinks you know what it is? A lot of people think they're being funny. That's what it is. Some people think they're being funny, but they come out condescending. Some people think they're funny, they come out insulting. Some people think they're funny and they're just not funny. So maybe that's what it was. But what I did see something else happen. What happened with Papa John's? Yeah. So I don't know what the story. I read the headline. The guy had to resign because he said a bad word. I mean, that's the society that we live in. But again, certain people can get away with certain things and certain people can't. That's why it's just hard to comment on this stuff.
Yeah, I mean, we have seen this. We have precedents for this because, like the Papa John's. What was said? What was the? I forget what the.
Yeah, he said you can't say a racial slur on a conference call and expect it to not get out, and then especially when it's not really your first offense. But
this wasn't racist, but it was mean,
right?
Like flat out, and maybe like. Almost accusatory because he came back with the second comment after that too, Spencer. So he made the comment to this other guy, and then he said, "Well, I'll bet an autographed dollar that it's true." I mean, he backed it up, and then he deleted both of those tweets. But too late in the Twitter world when you have 20 million followers, so it don't matter. You delete your tweets.
I think
it's all over the news.
I think Kenny's right. I think people something about Twitter just brings out the worst in people. People think they're being funny. I'm seeing more.
I think so too.
More and more people every day, it seems like, are taking a break. Prominent people that I follow are taking a break from Twitter. I spent an hour last night, by the way, cleaning out. I was following like 1,800 people, and I unfollowed almost 1,000 people. And I'm going to keep going. If you've never purged your Twitter, I highly recommend it. Something about the platform just brings out the worst in everyone. I don't know. Do you want to look at technicals on the stock?
Yeah, we do. I just want to say I think the stock's going a hell of a lot lower. So okay. I think the technicals are broken on it now, but it's not only from a technical perspective here. I think this is worse than you think it is. Like everybody, maybe says, okay, well, yeah, it's really not fundamental to Tesla, but this is a story stock. It's all been on the story. It is rallying on the story. There's no value. You can't look at this value. You can't be like a CFA, sit back, crunching numbers and say, I'm buying Tesla. This is a story stock. Well, the story just took a hit here over the weekend because he said something that was very rude online, and I think its story took a hit. So I'm actually surprised not down $20. And that being said, technicals, I don't like the technicals on this either, which is why I sold the trade. I liked it. Originally, Kenny, I got in this for a swing trade because it washed out through 300. I was like, you triggered some stops. I got right back up over. I was like, I'm going to buy this for a long swing trade because I think some people washed out through 360 down to 300. I think it's going to bounce. It did. It got up 327, but then it meandered there for 3 days. Didn't participate in a big market rally, and I was like, I don't like the trading action. So I took the 8-point gain or 9-point gain I had on it, sold it. So I'm out of it now. Now I'm just looking at it here, though. Technically, I don't like the chart on this one either. What are your thoughts, Kenny? Just technicals.
Technicals, I was actually really caught off guard with that last move up. Again, when they were talking about how they're running out of money and the cash burn and how, everything they were doing was wrong. And this thing was down at, that was when it looked like it was headed maybe possibly to break 200. And then came that 100-point rally. So I guess that had to be partially a short squeeze into a breakout. It just that chart looks almost like a penny stock at this point, from rallying down from wow, that got down on 250, man, 250 to 380, right back down. Yeah. You know what? This is where it should be. This is exactly where it should be. Again, this stock I don't trade anymore. Again, I'm one of the stocks I used to be in. I used to love Tesla because when nobody cared about it, I was surprised that not that many people were fans of it. I'm talking about when it was in the 30s and the 40s and the 50s. I was like, this is going to revolutionize the car industry. But the one tweet that I didn't like was when he called himself a real car company. You don't want to be a real car company. If it's a real car company, this is a $60 stock or maybe $80
we want to compare it to valuations to Ford, GM.
Right. I want to know that the reason, and this is all kidding. This is not even a joke. When I first bought the stock, I said, you know what? I want to own Tesla because when they colonize Mars, they're going to give me an acre of Mars when I own every 100 shares of Tesla that I own. I'm probably going to get Mars. So when I get my flag on Mars, I'll say, yes, I've been justified owning Tesla this whole time. And little by little, I'm thinking that might not happen. And I thought I was going to get part of the SpaceX program, but I'm not a fan. I don't even watch the stock anymore. I know he's a crazy genius lunatic, but yeah, not a fan. But this is where the stock should be. And again, for me, if this thing ever breaks under 270 again, it's going down to 200. And then and again, sometimes these Teflon stocks, and again, this is like an Amazon, this is like a Boeing, and you just can't get rid of the stock, no matter what they say and how much cash they're going through, and they're not going to meet their supply demand. You know what? I have a friend who just bought himself the truck and his 2 kids, 2 Teslas. So I guess people are still buying their cars. Not a fan of the stock anymore. Again, and most people, again, if you're an owner of a Tesla stock, then again, you're above my pay grade, because how much can you own of this $300 stock with this much risk involved? So again, if you want to own it, God bless you. For the next 10 years, I think you probably will make money on it. But for me, I'm looking for a breakdown in the stock, if anything. If this thing breaks back under it's like 272, you're going to 266, and then next thing you know, you'll be testing those lows. I don't think anyone's going to be brave enough to buy that dip if this thing breaks under 250 again. But again, not one of my go-tos anymore. Definitely not.
We're on the same side on this one, Kenny. So I'm bearish with you on this one, I think. Let's jump over to Amazon. It is Amazon Prime Day. Amazon, it starts this afternoon, Spencer?
It starts today at 3 o'clock, goes to the end of tomorrow. And you know what? I feel silly. I meant to bring this up, honestly, on like Wednesday, and I forgot, because this trade happens like every single year leading up to Prime Day, and it happened again this year.
It just runs up. And I bought it Friday at the close because I missed, and I had a little bit of a hard time. I was like, it's already up like 40 points. It's around. And my buddy at Bright there, he just follows all this from statistical probabilities. He's like, it is up every single Prime Day. He says, don't even worry that it was up $40. Just buy it and sell it on Monday, and you're going to make money. It's up 9 points here again on a flat market. So they just buy this thing ahead of Prime Day. It seems like clockwork. I don't know, one year when maybe the trade gets all crowded, it's not going to work. But holy cow, I mean, this is around, 50 points into Prime Day? I'm not holding it through because all the good news, I think, is probably baked in. We were 1750 3 days ago. Now we're 1820. We're up 70 points. So if you thought we were going to run up on Prime Day, we did big time here. It's a big pop. I will be probably selling my stock here probably at the open. I was just buying it for an open trade. But wow, this is a big move here again for Amazon. Last 3 days, I mean, you can't send crunch valuation on this one. This is a story stock as well, but it's also got a good story. And they can make money if they want to. They can make a lot more money. They just keep reinvesting into the company. What an amazing stock. Kenny, what are your thoughts? Amazon.
Again, it's beyond me at this point. I don't look at them. I just look at only reason I glance at Amazon and Tesla and Netflix anymore is to just get a feel for what the Qs are doing. And, I own the Qs. So in theory, I own Tesla and Amazon and all the big guys, but I don't trade these things anymore. But one thing is, my wife, she's very, very just like, she does her thing. She lives in her own little world. She never heard of Prime Day. So she just emailed me. She's like, maybe it's time to get that crock pot. I can't. She said the crock pot will probably be on sale for more than $40 off. Maybe we should buy it finally. So I guess that's what Prime Day means to the Glick family. I might get a crock pot today. But as I'm looking at the news, it seems like now there's so much more competition. So it's actually great for everybody. Because of this Prime Day, everybody goes and discounts everything in these next 3 days. So if you go into Best Buy right now, you're going to probably find some products that you wanted to buy a couple of days ago for another 20 or 30% off. So again, as far as a stock, listen, if you're trading Amazon on a daily basis, good for you. Okay, because it's not what I do. I don't look at it. It's above my pay grade. I generally don't even look at stocks under over 250 anymore. The most expensive stock I've been trading right now is this drug company, ICPT. But just again, if you're a long-term investor, how could you not want to own Amazon? But my way of owning it is through the Qs and some diversification.
Actually, so let's talk about that. Someone in our YouTube chat asked if you have any good bios, and since you just mentioned it, we'll go there. ICPT, what drew you to that one?
Well, Always basing everything on technical analysis. I look for stocks that have been beaten down. And once they come out of a consolidation range, that's when I look to buy. So I missed the first buy opportunity around 66. So I was waiting for it to break through this 76 area. And then once we got through 76, the next resistance for me was $97. So I figured if I'm buying the stock at 67, my downside is, if it rolls back over 10 points, but my upside was 30 points. And get this, if it breaks through this, again, we're right here at 97. If we can get through this, 97, for me, the next area is 102.50. And then I got a shot to get to 133.80. So I'm looking at a stock where I'm risking 10 points for a possible 50. That's the kind of stock I want to own. Nice. Now, the funny thing is about this company, I didn't really know too much about it. I'm a technical analysis guy. I see letters and numbers. And like I was in Italy, and I'm just schmoozing with a couple of people, and I mentioned the stock to some guy, and he actually knew about the company, and he's talking my ear off about what they do and the liver disease, and they're helping children who have genetic problems that might develop liver disease, and he's going on and on and on. So it just reiterated, me now wanting to own maybe even more of this thing for a break to 133, 135. Plus, it's a takeover candidate. And of course, this is a massive breakout on a stock that I believe was, I think maybe in the 400s, possibly 600s.
Yeah.
So getting this stock to go from $70 to 133 is really not a far-fetched idea. And again, not doing it with the stock, doing it with options. So if this, this trade goes, wrong, I'm out, it's not like I'm letting this thing go back down, too far, but there's going to be, I know we rolled the 80s into the 85s and the 85s into the 90s, and now we're looking at 95s. We're still got them for, I think I have the Septembers at this point. So again, if it goes wrong now, we're looking at a position that we're in using profits from the first day trade. Again, this started with a reversal intraday. I believe it was around, got to be about a month and a half ago. So early June, there was an intraday reversal. The stock seemed like it had some bad news, but it went up on the bad news, which is what I love. I love when you're seeing a stock that's doing completely opposite of what you think it should be doing. Again, if you guys are out there just learning how to trade, don't trust the analysts ever. Upgrades are not upgrades, and downgrades are not downgrades. And when a stock is doing something where you think it should be going the other way, admit that you know nothing. And again, I've been doing this 15, 20 years. I say it to myself all the time. I know nothing. I just do what the stock is telling me to do. And I know that the market is generally going to be right. So with this ICPT, as much as it looked awful for so long, that one day I was like, you know what? This thing's got a chance to rally 70, 80 points with a risk of 5 or 6. I'm in. And it's fantastic that now I know a little bit more about the company. But again, everything's technical for me. Again, even AMD, that I think they were gonna their virtual reality chip was gonna be fantastic, or their cryptocurrency venture was gonna be fantastic. Absolutely not. When this thing broke 250, out of consolidation after being dead for 3 or 4 years, I'm thinking, hey, this thing gets through 250, we're going to 5 easy. If we get through 5, we're going to 750, and that's how it always begins. I'm not again. Fundamental research has cost me, dry ships. Let's go Leapfrog. Let's say Penson. I thought I knew a lot about Leapfrog. Remember I have 2 kids. All I'm doing is spending money on Leapfrog products. I'm thinking Warren Buffett tells me to buy what I know. I'm buying Leapfrog. I'm thinking, yeah, go Leapfrog. I'm paying $40 for these little toys that are worth $2. Next thing you know, they go out of business. So what do I know? I know nothing. I know squiggly lines, red, green, yellow, and some orange, and what's going up and what's going down. Again, I still don't even know what AAOI does, but I own the stock. I don't even know what this company I does. Letter I own that one too. I have no idea what they do. I think it's a satellite company. No real clue, but you know what? The stock is consistently a buy on dips. I really still don't know exactly what they do. If you guys want to look at a stock I believe there's somebody with a $300 price target on the stock. I don't know if that was a joke or something, but they say they have the satellite technology that, again, like I said, I don't really do too much fundamental research, but These are some of the stocks that I own, and they always start with technical analysis.
Talk about a stock like this, because the stock is up in April from $3 is I, so simple I.
Yeah.
$3 to $21. When would you sell? Like, okay, as this stock starts going south, what would like be your sell signal to like, okay, I need to book these profits? Because is there a price you have in mind? Are you raising stops on it? How do you hold on to something this long, and how do you know when to get out when you need to get out?
We got in, when it got it through the $9 range, because once it got through 750, and usually if you get through 750, you're going to get 10 bucks. So if you get 10 bucks, you got 12. Now look, when this thing hit 19 and change and started rolling over, we dumped most of it. We held on to just a little tiny bit. And when it went back under 15, I think it was when it went back under like 17.50, we thought the jig was up. Here's another pump and dump, a stock that went from 3 to 20. It's probably going to roll back over. But when they come back, you have to say to yourself, wow, this thing's not going away. This is legitimate. So we bought it back when it broke back over $20. And now I'm thinking, all right, now I'm going to risk that $2.50 again. So now that I'm back in at 20, I'm going to give myself that $2.50 again. Obviously that's all well and good in theory. If the stock opens up at $3 one day, I'm going to be out of luck here. But right now, there was no reason not to get back in once it convinced me that this is a legit stock. Again, like I mentioned before, the RKDAs and the GBRs and the handful of those percentage gainers where they have those 1 or 2 day moves and then they roll back over, the difference. They go away, bye-bye, and you never hear from them ever again. I mean, the list goes on and on and on. But when the stock comes back and convinces me that, hey, there's something really going on here, I'll get back in. And again, we're not talking about big positions because I'm more of a trader. But once this thing broke 21, back above 21, now I'm thinking $22.50, $25 at least.
So you come back with your initial risk of the $2.50 and you go with that. That's a nice setup like that. So what's your target here? Your first target that you'd be going for then?
Now that it broke back over 20, I'm looking for $22.50. If we get through $22.50, I'm looking for that 25. And then if the stock gets
looks like
25 bucks, I mean, my God, I'm looking for 30. And then if we get through 30, then I'm going to be completely I don't want to sound back. I don't know about the language on here, but
no,
I don't want to say this $3 stock's going to 50 bucks, but right now we just got a nice, this thing's pretty much consolidated since May and just broke out again. So there's really no reason to not think we could get a $50 price tag on this stock.
I like that chart. I'm on board with you here on this side. This chart looks good. Like you said, it didn't go away. It came back up again. The trend is your friend. I mean, and that's a nice thing about it. I love this style you're telling us about, Kenny, because you come in, you'll risk a little bit, and if it doesn't work out, you get out. But you know what? Eventually, you're going to catch something that goes into a hard uptrend, and you keep bringing it up, and you're bringing your stops up. You're risking here, and you're riding that. And if you can catch a trend early, you can ride a stock for a long time. So it's just a nice style of trading. And, really disciplined there to obviously, turn around and say, okay, no, look, I'm getting out of this. It doesn't look good. And then it comes back. You're like, you know what? I don't mind. I sold it a little bit lower. I'll rebuy because it looks good here again.
Exactly. Yeah. And I'm not pretending that I was in this thing from 3 or 4. But once it got to this 750 is a meaningful price to me because I'm so old. Generally, when we had IPOs or just going back to the late 90s and the early 2000s, we used to trade options, and a lot of these options only had 250 price ranges. A lot of these stocks had no options, but the $5 number usually more often than not with momentum got to 750. So if you got 5 to 750 and you held the 750, that's how this whole trade got started. Once we got through 750, I'm thinking 10. Then 1250. But now, again, we thought it was over. We thought we sold it at a great price. We took a loss on some, because we bought more at, 18, 19, and we sold some at 17, 16. But once again, like I said, it just reconvinced me that there's something legit here. And again, I like it. And again, you guys are mentioning the AOI also. Same scenario. Here again, the stock has been absolutely hammered. And, it's just not going away this time. And again, there was a moment where we got involved in the 30s, and it slaughtered us there for a couple of days. But, once it broke out, bang, we're back in this thing. And now I'm looking for it to get to a minimum of $55, minimum. And again, take a look at data, everybody. I mean, this is the one that got away from me. And this is the one I should have retired on. That's my kind of stock, DATA. I mean, if you listen to the analyst on this company, if you listen to Kramer, he's like, I don't want you to buy the dip on this. This quarter is so terrible that this company it might be over for this company. And that's what the analyst was saying. That's what everybody was saying. And again, here you had $100 and something stock going all the way down to 30 and basically consolidated, chopped around for a while. And man, this thing was left me just wanting. I haven't been in this stock since probably the 40s or what was it? Probably around $60 is the last time I was ever even in this thing. Unbelievable move. And that's the kind of stocks that I like. Again, not about what they do. It's just when the charts convince me that it's legit. And again, I go back to Alibaba. I used to hate that stock. But when it broke over 120, that became my favorite stock on the planet.
Talk about short interest. Ed Parker bringing it up in the chat. And on INAAOI, those both have really high short interest. Is this something you look at? And is this something you incorporate into your trading decisions?
Absolutely. It is one of the things that I do look at. I guess if you want to, I don't know if you would call that fundamentals. To me, it's still more technicals.
It is technical.
What was you saying?
I'd say technical.
Yeah. So again, I love short interest because to me, there's going to be that point where there's somebody out there with a ton more money involved, a ton more interest involved, that's going to say, you know what, I'm wrong. Unlike the whatever that guy's name with his HLF call who didn't want to give up, or his VRX didn't want to give up. There's a point where the pain becomes too much. And they're going to trigger and they're going to cover. And those are those days where you'll see your AAOI up 6 points out of nowhere. That's one guy saying, you know what, the pain's too much, I'm getting out. And that's what's happening. That's why I love ICPT. I love AAOI. I love the I. And one other stock I still like, which is not really, the short squeeze is kind of still in play, is this company Yext. I've owned it for a while now. Once it broke over 15, still we got to 20, but just an awful chart on YEXT. And once you get out of that consolidation and you broke that 15, there was no doubt we're going at least 1750. And once we got through 1750, we're going to 20. I still own this. And again, if we could get back over 20, I sold some as it was going up, as every trader should. But still got a little bit of it. And when I say a little bit, sometimes I keep positions on just to remind me that I like it. Because again, I'm still a trader by nature. And it's coming into earnings season. I'm going to be mostly cash anyway, because I just love trading the reversals on earnings reports. And we could talk more about that if you guys want to join me. I do my own radio show after this show, which I'm going to be kind of tired for. But just email me at info@hitthebid.com. I'll type it into the room if I don't mind me doing some quick promotion. Hello, how are you?
Not at all. But that's a good segue into earnings, because we had a couple we wanted to hit on reporting this morning. I guess we should just start with the big one, Bank of America. They reported Q2 EPS this morning of 63 cents versus a 57-cent estimate. Sales 22.6 versus 22.65 billion. So a beat on the EPS, a slight miss on the sales. That came in a little bit light on the loan volume. Dennis, what is BAC doing this morning?
We're trading up here. I did not look at where it got to. I know we were trading a little bit higher. I think we're still trading up 30 cents, so holding on to those gains. Concerning obviously because the trading action from Friday in Wells and Citi. Wells reported kind of a not so good quarter and got hit. You got Citigroup that reported pretty good numbers and got hit as well, so they weren't loving them this morning. Bank of America's just kind of been hanging out here for the majority of the session. We got an initial spike over $29, came back in, and now we're trading $28.85. So trying to hold the gains, but again, these stocks are just not loved. I mean, these are not in uptrends. The banks are still in downtrends, at least if you're looking at 2018. So it's going to take some type of catalyst to get us up, but it seems like every time we seem to get good news, The banks just don't participate. I'm not sure why. I was blaming Deutsche Bank for a while, saying, well, I think, Deutsche Bank is holding down a lot of the financials because Deutsche Bank continued to drift down. We got DB starting to come back here now. The banks still don't want to rally. I mean, the earnings were okay. Yet all those buybacks, when you were awake, Kenny, there 2 weeks ago, they did a bunch of buybacks, raised the dividends up. They got initial pop on it all, and all the banks pretty much gave back those gains too. They just can't seem to hold gains. So hard to get bullish until we get some type of, momentum going on the upside, and these just do not have it. What are your thoughts, Kenny, on Bank of America and the financials as a whole?
Kenny,
Kenny muted.
The old mute trick. It's okay. Joel pulls that at least once a week, so we'll.
Kenny, can we hear you now?
Ooh, did I do something wrong?
It's okay.
He muted himself. He was swearing.
All good.
All right. You're talking about Bank of America.
Yep.
Yeah. So what are your thoughts?
This is exactly what I'll be looking at today. This is, again, not a fan of trading Bank of America, generally just like watching paint dry, but today will be the day. Based on the fact that you said, I didn't watch the market last week, but JP Morgan and the rest of the banks, were they up and did they reverse? I'm not sure. But for me,
they were. Actually, Citi was up over $1.50 and gave it all back. Wells was initially down because it was a bad quarter, so it never was. But who else reported? Somebody else reported, Spencer. I'm forgetting now.
No, those are PNC also. Not
no, it was four then. It was four. There was PNC. What was the other? I gotta go.
No, there was three on Friday. There was
Citi, Wells, JP Morgan. It was JP Morgan also reported.
For
JP
all
Morgan was trading higher, and it kind of gave it back too.
If we're gonna just go live in the moment, it's a short already. The stock had hit 29. What it hit 29.20. Couldn't hold it on that first initial spike.
Yeah.
You're struggling. You tried to get a rally from 8 o'clock till about I guess till about 8:30. It's rolling over right now. So right now it's a short. And again, if you want to really get technical, let's do it. If you're shorting Bank of America, you're looking to cover at 28.84 and 28.91. If it breaks those prices, chances are you're going back to 29.20. But right now, this thing that starts rolling over a little bit more. Right now, it's still a short. Looking for 28.50. Breaks 28.50. It's going to $28. So I'll be looking to short it. Maybe we'll look at the $28 puts this morning. But again, like you said, the trend is your friend. If you're telling me Citibank and JP Morgan all had the same kind of scenario, again, these were the trades from last quarter. Same thing. Citibank was one of our best trades. The thing was gapped up about 2 points. Within 10 minutes, the thing was down $1 right at the open. Again, hard to trade the open because you don't know exactly what's going to happen, and you're not going to get option prints because they keep the spreads a little bit too wide for you to get any decent print. You got to make your own market there. But again, I'd be looking for it as a short. Again, not suggesting anybody does this trade right now, but again, I will be looking at this stock. Again, this will be one of my go-tos today. And again, if we don't get back over 29, if it does rally, I'll be still looking at it as a short just based on what you just told me. So.
BlackRock also reported here, Spencer, BLK. The stock hasn't traded much in the pre-market, but it's starting to get hit here now. We're down $5. Actually, we had some odd lots print down 8. Give us those numbers there for BLK.
Q2 EPS of $6.66. That cannot be a good omen versus $6.61 estimate.
The 666 earnings.
Sales 3.6 versus 3. Sales in line. So the EPS beat and the sales were in line with the estimate for BlackRock BLK.
We got stock trading down $5. It's a financial. It's in a downtrend. I just look at this and I don't see a reason to get in this thing until it could start to show me some strength again. So same thing. Trend just not your friend here. I look at all the 2018 action. We started the year up at 594 with 507. I don't see a reason to get bullish here. Not yet. Kenny?
Considering the reported earnings, they have 1,000 shares traded on it. It's a $500 stock. Come on.
Same for you.
No, thanks. I won't even look at it today. Absolutely not. I'm more of give me some Bank of America. That's my price range. That's something where I could trade with a 3-cent spread. But again, BlackRock,
that's a great point you're making here. And traders will say, oh, well, you can trade 10 shares of it, or you can trade, smaller size because of the spreads. But I don't like 3-point spreads there either, which is why I don't trade BlackRock hardly ever.
There's no volume on it either.
The volume isn't there, so I can't move a big position in and out of it. Not with these. And if I got to pay a 2 or 3 point spread sometimes to get in and out of something, well, I'm giving up a lot of my short-term alpha right there. So that's why, I actually do like stocks like Bank of America, because you can move some serious size into Bank of America pretty easily. So, those are kind of more my stocks, are the smaller stocks where they're thicker that I could get in and out fairly easily, because it's hard to work the spread. I mean, the market structure is a mess. You can't work the spread like you could 15 years ago. You pretty much got to pay the spread in a lot of cases there. So it's difficult to, trade a stock that's got a 3-point spread.
Let's do another earnings this morning that I think is more within Kenny's price range. JB Hunt Q2 EPS of $1.37 versus $1.27. Sales 2.14 versus $2.05 billion. So beat on the top and the bottom for JBHT. Dennis, thoughts?
It's a nice pop. Overhead supply, though, you had all kinds of trouble up at 130 in May and June. I didn't see where it got to in the pre-market, but it wouldn't surprise me if it stalled right in that area, because that's where it stalled in May and June. I think Italia can get up over those. That's the area where it's going to struggle here. There's just so many highs in that area. We always say price has memory, and there was a lot of people who are in or out at those prices in June, probably looking to get their money back if it gets up there to 129, 130.
It got to 130.
Actually, now looking at the pre-market,
it got to 130.
Where it stalled.
On the nose, 130.
So not surprised. So it's already showed you that in the pre-market. So now as he gets back up to 128, 130, people probably willing to sell it. So difficult to come in here and be a buyer when you got so much overhead supply.
Kenny, thoughts?
Kenny, what are your thoughts? You got any thoughts on this one? Technicals?
I haven't looked at this one in a while. That's an incredible move. I immediately think short it. 130 is your cover. That's it. If you want it. Again, I'm surprised it's BlackRock. I mean, really, nobody cares. They reported earnings this morning, got 1,000 shares. What do you got, 10,000 shares traded on this thing? And JB Hunt, what do you got, 8,000 or 80,000?
8,000. Yeah, there's not much.
Not much volume on these stocks that are reported earnings. Again, two stocks again. I don't like to comment on stocks I hardly ever watch. Last time I saw JB Hunt, I think this was a $50 stock. Very impressive. Wow.
Uh-oh, he's a busy guy over there.
He's got to hit the bid.
Let's jump into the earnings report from tonight. I'm taking some heat. Joel's giving me heat on Friday. Spinner's giving me heat this morning. Deserved heat, because I was saying Netflix, I thought when it was consolidated at 420 for a couple days, I thought, if we break out, I was like, this could actually on earnings see 450. That's off the table. We've had 3 downgrades basically in a row. Well, not downgrades, with 3 negative analyst reports. First was Nomura. That was negative on the stock, and that brought it down. And that was my signal there, because I want to play it alongside. I actually shorted it at that point, because I was like, well, that's the first, negative report in a while. I covered way too soon, because the next day we got another negative report. And then today, Buckingham downgrades the stock. I will tell you, though, the price action on Netflix is fantastic here today, considering that it's downgraded. So it's downgraded here by Buckingham. It's still trading up $2. That's a lot of people who do not want to be short, probably into the report. I would not be surprised to see strength here today. It's still going to be a coin flip. I think it gets an initial pop. It's not going to 450. When it was at 420, that's only a 30-point pop. If you could get, a pop on earnings, I was saying I think they could beat on earnings. I think could pop 420 to 450. Now you're at 395, so it's a completely different animal here 3 days later. We're not starting from 420. We're starting from 397. So, could we get back up to 420? Yeah, I think you're going to find sellers there now, though, because it's different, because it broke the last couple of days. It broke down. So now you got people who are sitting stuck here. So now the story changes. And that's what trading's all about. When you're wrong with your initial call, you've got to be able to admit you're wrong, maybe even go the other way, or potentially, just change your opinion. And my opinion on this 3 days ago was like, I like the consolidation. I thought it, it could report and go to 450. That's off the table. I was saying that on Friday. It was off the table even Friday, because it had broken down from those prices. So now you're sitting here at 397. It's a different story. So now if it pops, you're popping right into resistance probably, and you probably find sellers. So there's overhead supply now an issue. So the story has changed. I don't know if we're going to pop or not. I'm not going to be taking it for a trade this time, because the story is completely different than when we were talking about it 3 days ago. So more information has been given to me, and you've got to utilize that information. What I'm saying now is I think you have overhead supply up at 420. Even if we do pop, I would actually be looking to short that pop.
Kenny,
I agree.
Netflix.
I agree. I mean, I love the company. My kids love it. Wife loves it. But I would love to see this thing just what I like to call the sucker gap. Have a good number come out. Subscribers are up. Everything's great. Thing opens up at 418, tries to get to 420. Sellers show up. This thing rolls over and goes negative. Yeah. Crush it.
Yeah. That would be an awesome setup. I would like that to happen too. Now, and you got to have a contingency plan in place, and I will, and I'm sure Kenny will too. If I do decide to trade on the earnings, I trade the earnings reports. And we know I'm very active, obviously. So, if it gets up there to 418, 420, I get my setup and I try to take a flyer and short. If it starts to break out through 420, start going 425 and start making new highs, I'll be quick to admit I'm wrong, and I won't mind taking an 8 or 10 point loser on it. But I don't want to see it start making new highs. And it depends. I mean, if it just pops up there on like a few seconds and then comes back down, it's a different story. But I don't want to see, it start to, find buyers in the after-hour session and start to take it out, because then my thesis would be wrong. And obviously metrics matter here. I mean, if they miss, it's going down no matter what, and their setup won't be there. But trading is all about being prepared for when your setup could potentially be there. And I think if it pops, like Kenny's saying, at 418, 420, starts to stall out there, that would be a nice setup for the short side.
Absolutely.
All right, Dennis, what else was on your list there? Because
I got a whole bunch on the list of ratings land, which we haven't even touched yet. We didn't get to imbalances. Kenny's been great here. We went on a few tangents with them, so we haven't got to a lot of stocks on our list. Arconics getting a big pop here this morning too. But let's quickly just go to ratings, because I did just mention the Netflix rating downgraded Buckingham. You've got a pair of trade here coming out of UBS. They are upgrading UPS. They are downgrading FedEx. So there's two stocks going in the opposite direction, two stocks that are very related to each other. What are your thoughts here, Kenny? Let's talk at FedEx first here. It's the big one. It's getting downgraded here this morning, but stock was in an uptrend, it seemed like forever. Had an awful June. I mean, we were down 40 points in basically 2 weeks. Now we're trying to crawl our way back here, but it's kind of struggling again. What are your thoughts on a chart like FDX?
Wow. Again, just a quick look, it looks like it's trying to get back into the upper range from where I'm looking at. But when do they report? They report this morning, or are they reporting?
FedEx reports it's coming. That was just a downgrade here this morning. So UBS downgraded
FedEx reports on
a few weeks out, isn't it?
They're not till September. They're a long
so
way.
Yeah, I'm report for a while.
Well, the way I look at it is, again, I never trust anything coming out of upgrades and downgrades. Generally, I'm looking to go the other way. But no, it's not even a joke. I mean, it's ridiculous how these guys with their MBAs and their analysts and they want to perpetuate the lie around Wall Street that they're so much smarter than us because they went to school for this. They know nothing. If they knew anything, everybody would have been telling us about the crash of 2000 other than 4 people. If they knew anything, there would have been more than 10 people talking about the crash of 2008. But again, I don't want to get into the whole thing. Upgrades and downgrades are basically, for me, I like to fade the analyst. Most of the time they're upgrading stocks when they're about to go down. They're downgrading them when they're about to, find a bottom and rally back up. So as far as for me, for FedEx, I mean, this thing, it's kind of in, where are we now? Again, I got to start looking. For me, it's a buy back above 236 for a move back to 245, and then we'll see where the earnings are coming in. But again, upgrades and downgrades, if you watch them closely, and I think someone should launch a website if it's not already being done, just track the analysts and show everybody how awful they really are. I mean, how many times has Goldman Sachs downgraded AMD? Does anybody remember? 3 separate times, if you haven't remembered. They downgraded at 4. They said it was going back to 250. Then it broke over 5. They downgraded again, said it was going to 250. And then when it broke over 10, they said, please, for the love of God, sell it and short it. It's going back to 250. So nobody cares. Nobody knows. Basically, every upgrade and downgrade is generally somebody getting paid off. This is just a theory of mine, and I believe in it, and I truly do believe it. If there's somebody short a couple of million shares of AMD and they're getting their butts kicked, okay, they'll go to Goldman Sachs and say, hey, look, if I give you $250,000, can you do me a favor and short AMD in a couple of days from now? I'm going to triple my position. So when you downgrade it, I can cover my position. He pays the guy off. Everybody wins. And nobody remembers the analyst that downgraded AMD. Only me making the point today. If you watch, again, go back to that stock data, everybody downgraded the stock at $38. Where are those analysts right now? They're still getting paid. They still have jobs, and they steered everybody out of the stock that's now up 400, 500%. And they're shorting AMD apparently at $4, looking for it to go to 250. And the list goes on and on and on and on. You just don't want to listen to analysts. They're awful. They know nothing. It's an opinion is all it is.
Couple of things.
It's an opinion is really all it is. It's, people crunch the numbers, and it's another opinion.
Right.
But there's a million opinions on every, highly traded stocks obviously out there, because there's always a buyer and a seller. Somebody thinks going higher, somebody thinks going lower at any given time. That's why you have a trade. So it's just an opinion.
Right. And I'd like to tell you, just to go a little bit further, when we had market makers on the box, the level 2, and you could see Morgan Stanley, Goldman Sachs, and all that stuff. Okay. I would call up, I remember there was a time where I forgot when we called it, what was it called? RIM, BlackBerry. Okay. The guy upgraded RIM with a price target of like 30 or 40% higher from where it was. Okay. And all day you saw that guy on the offer selling into the strength that he created on his upgrade. So I called in. I called the guy, and even I knew what he was going to tell me. He was going to tell me, we have certain clients, blah, blah, blah. As soon as I called him, I was like, hey, listen, I was wondering, just curiosity. I'm a concerned shareholder of BlackBerry or Research in Motion at the time. I'm concerned. I'm also a trader and concerned investor. I see you on the offer all day selling into the strength that you created on your upgrade. What's given here? I mean, did you do the upgrade so you could unload some stock? And exactly as I thought he would say, well, sir, we have clients in every different, doing different strategies. Well, there's one of our clients who's using this day of strength to unload some of his shares. And I said to the guy, all right, come on, buddy. You made the upgrade for that guy to unload his shares. Let's just be honest here. And he hung up on me. So right there, I knew I was onto something. And that's 20 years ago. And I still believe it today. And if you watch upgrades and downgrades on stocks, more often than not, you're going to see that stock again reverse. Thank you for that VRX downgrade, guy. I appreciated that day when I got to buy more at 17. Thanks, fella.
The one thing I'll say, Kenny, you mentioned the site that tracks analysts. TipRanks.com does a pretty good job. It's not perfect, but they do a decent job of tracking the analysts. And then as far as, paying attention to the moves in the morning, I mean, we follow them because they do move stocks in the pre-market session, which is obviously when the show
and the regular session. You have to respect the moves.
So they can move it.
It's usually going down that day.
Right,
unless
they're meant to be faded. That's my point. And again, you were saying something about Netflix being downgraded. Again, we're seeing it up. And I know Tesla's down, not on a downgrade, but this is the kind of move where when you see Tesla's down because he called somebody a pedophile, no matter what you feel about that situation, generally I'm coming in thinking I want to be buying Tesla. Not that I am, not suggesting anybody is, but just in general, I'm usually the anti-news guy. I'm looking for the stock to do what you generally wouldn't think it would do. And again, that really comes down to it with upgrades and downgrades, because the common folk, I'm not insulting anybody here, but again, the common folk, you see something on Yahoo Finance and you think this guy hates the stock, blah, 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 let's go with that guy. Not knowing anything about his track record, not knowing anything about what's really going on. And people fall for that stuff all the time.
I mean, I think there's a lot to looking at a tip rank, Spencer, and, analyzing the analysts. Like, so people just take it at face value and they don't dig any deeper. Probably 99%. And I'm guilty of that too. Sometimes maybe you got to look at the analyst and say, how has he done before? Like the guy that called GE going, down when it was $30, saying they're going to need a capital
John
raise.
G.
The Deutsche Bank analyst. I mean, that's just put him on the map. And now I think, I hear Inch. I'm like, I got to watch what he says. And certain analysts will be more influential depending on their calls in the past. And I mean, look at their track record. That's a good point, that Kenny's making here too. Do they have a good track record? Are they, making good calls? Because if you're just going to blindly follow analysts, a lot of them probably don't know what the hell they're doing. Some of them do though. And some of them are very good. We've had some of them on the show, obviously. So follow their track record and see how they do. I mean, it's just like, anything.
Absolutely.
Just look into how they've done. And it's an opinion. And if their opinions have been poor in the past, they might be poor in the future. But if they're pretty hot, or maybe they get on a hot streak, maybe you want to follow them.
All right, Dennis, 8:59. Can we get some quick and balance updates?
Let's go take a look here at the opening imbalances. They're very small here today. ExxonMobil, oil is getting hit here today. We are down significantly. We haven't talked about it, but holy cow, USO is underwater, down 2% here this morning. So we're getting follow through sell. I'll stick with it. I mean, that's where I look at stuff. When you get that ugly red candle 3 days ago, that was a breakdown, and any rally is going to be met with more sellers. That is what is happening here now. I think oil has topped out, at least in the short term. I still have a lot of oil exposure in my long-term investment portfolio, but as a trade, I have none. ExxonMobil, 55,000 to sell. Chevron 14,000 to sell. So a couple small sell bounces will probably grow though. You know what? It's mostly the sell side. Pfizer's 50,000 to sell here this morning. Merck 26,000 to sell. We got Coca-Cola, Johnson & Johnson. They both have 54,000 to sell. You know what? 403,000 to sell. There's nothing really, jumping out at me and saying, whoa, check out this imbalance. Kroger's interesting. That's a big one for it. KR is 90,000 to sell. Not that, that's a big move or anything, but when you see 90,000 to sell on something that doesn't trade that much volume, at least early, that's a big number. But overall, imbalances are pretty small here this morning, not really impactful.
All right, 9 a.m. Let's just wrap up. Kenny, any final thoughts for our listeners this morning?
Just again, definitely looking at Bank of America, seeing if it's, if it could get back to that 29 level, looking for, again, I'm not going to say what I'm doing exactly, but chances are I'm looking for a short. The diamonds, again, big fan. I trade the diamonds a lot. I don't know why. A lot of people make fun of me, but it is the market. It's going to move. So it's already started to fade. And if you watch the diamonds, you should be looking at the YM futures. And we're still below the VWAP from 8 o'clock this morning. So, and we are in a slight downtrend. So I wouldn't be too surprised to see this market, give it back a little bit more. And so I'm in a shortened kind of mood, and see, again, that's really what I'm looking at right now. Again, ICPT, you see what this thing does. Very difficult to trade. Got a big spread, not that much volume on it, but looking for this thing to get back over 100. And if it does get over 100, I'm heading to it. So again, I'm in this thing from 80. It's easy for me to say, yeah. But again, if it breaks into the hundreds, I'm looking for another 35, maybe 40 points on this bad boy. All right. Kenny
Glick, hitthebid.com is his site. Fantastic job filling in for Joel today. Kenny, thanks so much for joining us. I hope you had fun. I know we did. Thanks to all of our listeners and our chatters on premarket.benzinga.com and youtube.com/BenzingaTV. Again, great job, Kenny. Thanks a lot. We'll be back with you folks again on Tuesday. Hope you all have a good rest of your day.